So the big question is this: how are investors like us, who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings and retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer. Awesome. All right, so today, guys, I want to talk about something I'm super livid about, super passionate about, because it really affects millions and millions of people every single day. And I just think it's total bogus. And I'll tell you what prompted this is I just got kicked out of the gym. I had cargo shorts on. Like who oh my God. Just, I don't know, man. Like, that's kind of crazy. So today we got to bike really hard because today was a big day. And yeah, I don't know what's going on. It's so stupid. Like, it doesn't affect anyone. There's like probably about 100 people plus there. Like, who the heck cares if someone has cargo shorts on? Like, it doesn't matter. And that kind of psychology, that kind of mentality is what I want to talk about today with the SEC and financial regulations. Some of them are super important, right? Like, it's important to have people at the gym that make sure, people aren't sneaking in the gym, and to make sure that people are lifting with proper form, they're lifting safely, they're being, not a huge disruption. Like, that matters. Same thing in the financial markets, right? It's important to have the SEC overhead so that people don't just like insider trade all the time. And with insider trading, that's just like, say I own a company and then I know that like our earnings are really good, and then I tell this firm that manages a hedge fund that our earnings are super good and they should buy all of our stock because we're going to go up a bunch. And then they buy all of our stock and they make like $10 billion. Like, that would be illegal, right? That is a thing that you don't want to do. And that's why the SEC punishes people for insider trading and for using information that's not generally accessible to the public, right? So, if you're the CEO at a company, you have information that the general public doesn't have. And because of that, your investing insights and your ideologies are going to be very more advanced than what the general public knows, because the general public just doesn't know what you know. And because of that, you have an unfair advantage in the marketplace, which is why the SEC is, they punish people. So the SEC, what they'll do is they'll punish people who, use insider information to make trades in the marketplace and have unfair profits, which totally makes sense. Same reason why people at the gym, they have some security, at least at big gyms, to make sure that, people aren't doing stuff they shouldn't do. But I think there comes a line. And there comes a line in the real world, there comes a line in the securities world, there comes a line anywhere where the rules are just a little bit freaking stupid. And you kind of got to sit back and think, who does this really help? Does this really benefit people? So I got kicked out of the gym today. I didn't even get a couple of sets in on, it was a big day today, but anyway, I got kicked out of the gym because I had cargo shorts on. Like, that's stupid. I bring one pair of clothes to school usually just because I have to bike to school every day, and it's about, 30-40 minute bike ride depending on how fast we go. So, it's not very practical for me to bring different sets of clothes. So I got to kind of carry everything. Hey! And it's tough to, have gym clothes, school clothes, a suit, because I've got to cuff the clients a lot of the times. And it's just, I don't really want to have 100 pairs of clothes in the back of my bag on top of I usually bring a bunch of books to read, especially, if there's classes that aren't very, interesting. You read books that grow your future. Like I talked about in the last episode, books are really powerful, right? So I'll have book, I'll have my helmet, I'll have, note-taking stuff. There's not a lot of room for an entire extra set of clothes. And I just don't really want to change, It's like, why? It doesn't matter, right? So, who the heck cares if some kid out of the 100 plus people there, exercises with cargo shorts on? It doesn't make a difference. And that same thing is happening every single day in the financial market. The SEC, and I talk about this in the book, they have this rule called the PDT rule. And with the PDT rule, your account is under $25,000 in value. They limit you to 3 day trades a week, which means you can enter and exit a position in the same day 3 times out of the 5 trading days in a week. Now, to give you guys some perspective, I probably make 5, 6, 7, 8 trades a day if I'm really active. I mean, bare minimum is like 2 or 3. And that's 2 in, 2 out, 3 in, 3 out, 6 in, 6 out, 7 in, 7 out. Like, those are full-blown positions, and I'll make really nice profits on them. And I know a lot of people do the exact same thing, especially professional traders. They're taking, 5 trades a day because that's just how they operate. Because, with a lot of these positions, you have to get in them early to reap the maximum rewards, and then you set your safety nets, right? You set your stop losses, you do your due diligence, and you get the quality financial education that you need to be safe with the trades you make. Because anyway, okay, we're good. Anyway, so this PDT rule, right, what it does is it takes away that freedom, that capital liquidity that you have, and it actually severely limits your ability to trade as a trader, which is so stupid. Okay, so the SEC comes in and they say, look, your account's under 25 grand, you must not know what you're doing, you can only make 3 trades a week, 3-day trades a week. Like what? Like what? Like where did that come from, right? Because look, here's the deal. If you read 9 to Noon and you go through some of the stock lecture trainings that come along with the book as free bonuses, like you're pretty freaking good. You're above probably 90-95% of people on in the market and on the planet, to be honest, because that's information that a lot of people just don't have access to, and you're very fortunate, to be able to have access to that. It's really a great opportunity. But anyway, if you know what you're doing, you shouldn't be limited to your trading ability based on your portfolio size. So stupid. It's like what? Like why? Right? Because you've got people that hey, thanks man, I appreciate it. You got people that have spent years in the market for 4+ years, right? 3, I don't know, something like that. And I know what I'm doing, right? Hey, thanks so much, I appreciate it. But I lost. It's tough sometimes to get to that initial 25,000 to get a day trading account. That's why I work so hard. That's why I write books for people, because I don't have time every single day to trade. I got school, and that kind of messes me up. I can't really trade 9 to noon during school, and the work I do is great, but minimum wage takes a while to get there, right? So that's why I do more entrepreneurial stuff, because I can have a bigger impact and have bigger revenue generation, so that I'm able to cross that boundary, because it's this arbitrary number of $25,000 is what you need to be a day trader, at least really, really actively. Because look, I don't know, it's weird because you put a couple grand in a portfolio and you totally freaking start with that. There's no doubt you can start with that, and you can double your money. That's awesome. That's so great. And the 9 to noon stocks will let you do that. But for a lot of people that I like to go all in on things. I don't like to go halfway, and by making only a couple of trades a week, I feel like it's different now that I've been trading for so long. Because it used to be that I would trade under my parents' accounts. My parents had well over $25,000 in the market, so I wasn't limited by the PDT rule, which I'm very, very fortunate, very great position to be in. And I kind of got a little bit spoiled because I just turned 18, and now I have my own accounts. And I'm like, crap, dude, I made 3 trades already, and it's Monday. And it kind of pisses me off because there'll be great trades. But with the stock market and with 9 to noon trading, you got to be consistent. You got to be there every day, because there's no telling which day is going to be the day the stock triples, the stock quadruples. And you just have to get in those positions and follow your technical analysis principles and find the right one over time. And if you limit yourself to 1 day a week, you got a 20% chance. Hey, I appreciate it, man. Thanks. You got a 20% chance of finding that single stock, or that 1 day of the week where that stock goes out and really, really crushes it. And now you have to work for 5 times the amount of time to get the same result you get in just a week of trading. Because in a week of trading, you get to go through so many more tickers than you'll go through if you have this PDT limitation, and then there's the argument that you can paper trade, and that's awesome, but I used to paper trade, and I talk a lot about it on here, but paper trading, it's just not a good, once you get to a certain point in your growth where you know what you're doing, it just doesn't make sense to paper trade, because it's only going to develop a couple of very basic skills, and after that it's just more about psychology and practicing and understanding what it feels like to lose money and make money, and then disciplining yourself to make money consistently. And So with paper trading, it's like I really value my time. I work really, really hard. I work like 16 hours a day, every day. And so to just throw time away for no money, here's the, okay, I gotta admit, I'll still do it because I just really like stocks. And I'd say probably 3 days a week, 2 or 3 days a week, because I have classes from 9 to noon on Tuesday and Thursday, which is so stupid. They have this one class you have to take. They force you to take it, and you learn how to write resumes. And I talked about this, I think, in an earlier podcast, but it's that class. It's the resume class. And today we got to learn about resumes, which was so amazing. I'm just so excited to get a job, right? Oh my God. Anyway, so I think 2 or 3 days before school started, school just started, so it might be 1 or 2 days, but I'll still trade 9 to noon, or at least 9 to 10:30, because I do really, really love it, and it is a lot of fun. But it's tougher, right? Because now I'm trying to get these sales jobs, I'm trying to get this work in, trying to do these high income opportunities to grow and online or whoever, to make that first 25 grand so that I can, bypass this rule that is so ridiculous. Why is it that just these Americans who are in the greatest economic powerhouse in the world, but they don't have 25 grand to trade, so I guess they shouldn't be allowed to day trade? That's so stupid. And even if you have a margin account, and that's a whole nother thing, right? Because with margin accounts, usually you don't want to go to margin account because you don't want debt, which makes sense. But get this, right? There's this thing called the cash float rule, and I personally violated this rule. I think I talked about it in the other podcast a little bit earlier, where they will freeze your account if you trade money that hasn't cleared through the T+2 rule or the T+3 rule, and those are just rules that dictate how long transactions take to settle. So, can I cross the street here? Dude, I can totally cross the street here. Oh, that's awesome. Ooh. So what happens is you'll go into your account, you can make a trade, and then you can sell that trade and you make $500, and now you have to wait 3 days to use that same cash in another trade. And it's so stupid, because if you're trying to make a bunch of trades, that's going to severely limit your capital liquidity. So that's why for a lot of people, myself included, you have to go ahead and open a margin account just so that you have the ability to trade the money that's yours anyway. But you're not risking leverage, right? You're risking, margin. You just have to always know your limits, because if you type in the wrong number for the number of shares that you have, all of a sudden you're possibly in debt to a broker if you lose cash, which is really bad, really not good. And it all stems from, and it's not a tough fix, right? You just have to carefully determine the cash value of your position sizes. One way to do that is to just use a handheld calculator, and and just understand what the value of your trade is going to be before you enter it. I multiply the number of shares by the share price. So that's one strategy I use pretty much every day I trade, is to have a really nice handheld calculator and do some quick math so that you can get your perfect position size by dividing your ideal share size by the price of the stock, and then writing that number as the number of shares. And then what that's going to do is it's going to give you a very quick speed hack over the rest of the marketplace that's doing calculations in their head or with a slower computer. You just kind of have to have those calculations on hand really quickly to be quick with your trades, especially with 9 to noon trading, not necessarily with long-term investing, but that's a different story, right? So with these cash, clearing rules, it's T+3, T+2, all of that stuff stems from the inefficiencies of centralized asset markets. Because in the centralized markets, and especially with dark pool trading, you'll have institutions that don't report trades for a day, right? And then, since they don't report the trades, it takes even longer to process the trades. So you're actually waiting and waiting and waiting for the centralized clearing houses to validate your transactions, validate your trades, and that eats up valuable time. And now, all of a sudden, you're unable to use that money. That money is locked up. SEC will punish you if you try to use it, and the broker will punish you because brokers are obviously regulated by the SEC. Same by the PET rules, of course. And when that happens, you're at a complete loss for capital liquidity. It just sucks. It really sucks. It's these stupid rules that a lot of them, like the PET rule, are just completely random. Other rules, like the cash float rule, come from inefficiencies in the marketplace, and it forces people to open up margin accounts, which is totally good. You just got to be responsible. But you have to bypass these rules, which are solely created because of inefficiencies in the marketplace. And that kind of like really just isn't, that makes me upset. It makes me sad. It just sucks because it raises the fundamental barrier to entry into finance for millions, billions of people, right? Because these individuals, maybe they have dreams of trading 9 to noon. They have dreams of making money as a day trader, creating an insanely profitable living, a passion, a growth. But for a lot of people, especially once they get the education, they're ready to go after the races. They're ready to start running. But maybe they're younger. Maybe they don't have as much experience in. And that getting that initial 25 grand to bypass the PET rule, it used to be different. It used to be you could open up like an offshore brokerage account with a company like SureTrader or all these really sketchy US exchanges. But then what happened is the SEC saw people doing this, and they actually went and shut down those brokers and said, hey, you guys are not allowed to have United States clients. Like, what the heck, man? Those were the gateway for millions of people to have access to financial markets, to have access to 9 to noon trading that they were otherwise completely blocked off from. And they were trying to hone in on their skill set. They were trying to develop themselves so that they could use this day trade, this 9 to noon trading, as a way to create a real living for themselves and their family. On your left, and then the government, the SEC, just comes in and says, no, we're shutting it down. Like, what the heck? And the same thing happened in cryptocurrency markets, right? Like investors who were, well-versed, researched in the marketplace, knowing what they were doing, were going to these complex exchanges that had, very, higher educational barriers to entry into this blockchain investing space, because you kind of had to know what you were doing to get into these smaller cryptocurrencies, like the ones I talked about trading earlier in the podcast, where you're trading, the smaller cryptocurrencies. You have to be pretty smart in the blockchain space to understand that stuff and to invest in it. And then the U.S. SEC came in, and all these sites where I was, trading, and it was amazing, right? And you had access to these financial instruments, these financial markets. The access through centralized brokers, which were the only means, by and large, to trade these securities, these currencies, these tokens, whatever. The SEC comes in, they shut it down, man. They say you have to offboard. You cannot have U.S. clients. You cannot have U.S. persons participate in this brokerage account. Like, what the heck, man? That's insane. That's so stupid. You're closing off financial markets to millions and millions and billions. It's insane. It's ridiculous, because now the people that have like dual citizenship in France or I know a couple friends, they were from that country, Canada. Yeah, Canada. And because they were Canadian residents, part Canadian, part France, whatever, they were actually more able to take advantage of these financial growth potential, these opportunities in these financial markets than most Americans. Like, isn't that insane? All because the SEC decided that, this is a bad investment. We don't want to let people invest in this. Like, what the heck, man? Like, what the heck? It's crazy. It's ridiculous. It's insane. And that's why, when you look at these rules, like, yeah, there's probably a reason behind them, but like, for so many people, they just act as prohibitors. They act as limitations. And people have to really, really hustle. I got to hustle really hard to get over this PDT rule, to get over some of these limitations on day traders that, or 9 to noon traders that just, it's really difficult, because just like that guy at the gym who said, you know what, I'm going to kick you out of here because you have shorts, cargo shorts on. Like what the heck, man? I'm paying for this gym membership. I'm paying to be here. Just like when you trade stocks, when you trade cryptocurrencies, when you invest, you're paying the US government, you're paying the SEC. I don't know if you guys know this, but as of right now, every single trade that you make, the SEC takes a very small fee out of the trade. So you make a trade, and a very small dollar amount from that trade goes to fund the SEC. And every day the SEC, millions and millions, billions of orders come in, and the SEC gets a little bit of money every time someone trades. And that, like, we are literally paying for them to come in and say, hey, look, we don't want you in the markets. Like, that's insane. That's so stupid. That's like me opening a sandwich shop, and then when people come in and buy sandwiches, I say, maybe I sell cookies, right? I worked at Subway. We sold cookies and subs, right? That's like me having these cookies. People love cookies, right? They're Subway cookies. Everyone likes Subway cookies. And they come in, buy their sandwich, and they say, oh, I want a cookie. And I say, no, you can't have a cookie unless your stock portfolio is over $2,000 or $25,000, whatever, right? Like, that's so stupid. Like, who said that? Like, that doesn't happen in traditional marketplaces. That doesn't happen in places that are governed by capitalist principles, where people want to make cash, right? Like, the government is turning away cash and rejecting individuals' access to the most powerful financial institution, the most powerful financial market in the history of this planet. Like, why? Like, what's the reasoning behind a PDT rule that says, hey, you know what? You just can't trade. Not gonna happen. It's crazy. It's so bogus, and it impairs individual investors every single day. But you know who it doesn't hurt? It doesn't hurt the people that are lobbying. Doesn't hurt the millionaires that are, and not to say it like it's a derogatory way, but the people that are, out there petitioning, Congress or whatever, like the really, really big hedge fund managers, the really big players in the space, like these super, super powerful, super, super wealthy people. That aren't trading 9 to noon, right? Like, they're just, they just put their money in, fun. It's totally cool. But they're the people of influence in the space, and I don't know how it happens, but like, these higher powers facilitate these rules that impair individuals at a fundamental level where they are not able to actively participate in the American economy, and it's just blocking them out. It's like flat out, rejecting a client and saying, no, I don't want to work with you. Like it doesn't, nothing happens, right? When you trade, who does it impact for, some kid or whoever to open up an account with, $10,000 in it and make more than 3 pattern day trades in a week? More than 3 opens and closes in a week. Like, it doesn't hurt anyone. No one will know. The world will not be any different after that happens than when before it happens. It's all electronic. It's like, it's bogus, right? Like, people say, oh, but they need these rules to protect new investors. But like, they're fundamentally blocking new investors from getting experience and practice, which is the number one way to learn and get experience in the marketplace, so that they're better. And now they turn from new investors to advanced investors to skilled investors to, professional investors. Like, that's so cool. That's a title that you can get purely from your ability to generate income trading assets and equities in the U.S. stock market or in any stock market. Like, that's insane, right? But the government, they're like, no, can't do it. Like it doesn't affect them, right? It makes absolutely no difference if someone is trading more than 3 times a week. So it's like, what's the point, right? Like, why do they want to have this control over the people that are just starting out in the market? Because it's really a serious issue. Like, there used to be workarounds, but there just aren't anymore. And it makes it really, really difficult because now, I'm just, like, a lot of people, they're just cut off. Can't do it until you make that 25 grand. And then it pushes people, and then you got to, like, learn about how to make money online, at work, like like works awesome, but for a lot of people that's a lot to save up and start with. Whereas if you could double your 10 grand portfolio in a couple months, or it just kind of depends on your trading, right? Like I've seen people double in a week, double in 2 weeks, and it's just based off the market conditions. It's based on a whole lot of different things, and how much experience you have. It just kind of depends on a person by person basis. But like if someone has the ability to do that, then like why not let them? Why disable them? Why prevent their access to the marketplace? It's really just a crazy, phenomenal thing that happens, and the rules behind it are they just babble me, and they limit so many people every single day, and it kind of brings into question like yes, there needs to be security at the gym. Yes, there needs to be a centralized, probably needs to be a centralized manager of asset markets. But like what if we could change that, right? Like what if instead of security at the gym, what if everyone at the gym collectively agreed to a set of rules that made sense and were approved by individual members, right? So that people could determine if it was fair that some random guy works out in shorts that are cargo shorts. Like who cares? And usually people don't care, and the world lives on, right? No one's gonna get crushed by a huge barbell because they were wearing cargo shorts. It just doesn't happen. It doesn't matter. It doesn't make a difference when you're benching what kind of shorts you have on. So same thing in the marketplace, right? Like when you look at the people that are out there doing it, like does it really matter if they trade more than 3 times a week? Like, is it going to kill anyone? No. And also, if you look at the inefficiencies, right? The inefficiencies in a gym, there are pretty few inefficiencies, I think, in most gyms. You just there's like weights and machines, and you just kind of like work out. In asset markets, like there are these massive inefficiencies with centralized asset management. You have these very, very huge stock exchanges, centralized clearing houses, ACH firms, all these people that have complete and total control over every aspect of money flow. And what it does is it gives every single individual the slowest service possible at the highest price possible. Totally bogus. I'll tell you guys an example. Very recently, I had all my money under my parents' account. They had to sell all my stocks, and then they wrote me a check, and my mom mailed it to me after I moved, and then it got here, and that took probably 3 weeks just because it was kind of hard to convince my mom to sell all my stocks. It took a really, really long time. And I also didn't have access to my accounts because they were under her account. That's kind of my fault, I don't know. That's not a huge fault of anybody. But the reason she mailed the check to me is because it cost like $4 to wire, like it was like 6 grand, 5 grand. Like why would it cost $4 to just send money from one bank account to another? That's so stupid, right? And then you look at blockchain technologies, and they'll do that exact same thing in, 5 minutes at max, sometimes a couple seconds. And for fractions of a penny, that transaction is completed. You're done. But anyway, going back to what was happening. So she mails me this check, and then I go and I get it in the mail, and then get out my phone, Capital One app, and you gotta find banks that don't charge fees, which is so stupid. It does not cost $4 a month to have a checking account, to have a savings account. Like, that's ridiculous. Yes, the bank has hard costs. You know why the bank has hard costs? Because it's an inefficient model of capital management. They have to pay for these ridiculous ACH clearinghouses and transaction fees that come from internalized, centralized clearinghouses and wire transfer agents that are moving your money through these huge, huge central models that are ridiculously inefficient compared to current technological standards, especially in blockchain. And then they also, have to, pay for the bricks and the ATMs, and especially like the actual banks. Like, why does there have to be an actual bank? It used to be that no one had phone, but now, like, I don't know, 90+% of the world, I think that number's right, especially in America, like, everyone has phones, right? So everyone has phones. Why can't money be digital? Why do you have to pay for this bank that sits on the corner of the street so that people can walk in for a loan? Like, apply for a loan online. You want to open an investment account, you have to walk into the bank. Like get an investment account online. Like, it's so stupid. And then you have this stuff that's still there because, I don't know, older generations or something, and you have these people that don't want to switch over to the technology. that don't have the perseverance to do, whatever it is to transfer over to the new wave. Which I mean, like, yeah, that makes sense, but like, why should everyone else pay, hundreds of dollars per year or in a lifetime of any given bank account? That's money that's going to pay like the salaries of bank tellers and employees that are, fundamentally not really needed in an online economy, in a world where blockchain technologies use the magic of computers to facilitate these insane transfers of wealth and value over time, based on a system and a network of decentralized peer-to-peer computers they're just computers every single day that are crunching numbers, validating transactions. Like, these computers, they work on the cost of electricity, and they do the work of thousands and thousands of humans that are working in these massive, historic banks, which are at a fundamental level just complete waste of money. Because while your money is sitting in the bank, right, the bank, they have to hold 8 to 10% of all of the savings in cash. Well, the other 92% gets invested. Want more stock market secrets? If so, go get your free copy of my best-selling book, 9 to Noon. You can get your free copy plus $11,176 of unannounced bonuses completely for free at 9tonoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets we use to double our portfolios every 2 years and make upwards of 10% per trade daily.